Imagine finding a growth stock before it explodes, one decision that could transform your portfolio. Today, I'll reveal 3 companies with breakout potential, a leader in conversational AI, a cloud infrastructure innovator, and a powerhouse in high-performance computing. These aren't just incremental plays, they're building the future. Smash that like button, share this video, and subscribe for more high-impact investing ideas. Drop your thoughts in the comments below. Let's get into it. Let's dive right in. First up is SoundHound AI, ticker SOUN, a true innovator in voice technology. Founded in 2005, SoundHound has spent nearly 2 decades perfecting the art and science of conversational AI, making it one of the most experienced players in the space. Their mission is simple, yet ambitious: to enable humans to interact with technology as naturally as they do with each other, using nothing but their voice. Unlike Siri or Alexa, SoundHound is an independent enterprise-grade platform for conversational intelligence. This means they aren't tied to any single ecosystem or device, giving them the flexibility to work with a wide range of partners across industries. Their technology is designed to be embedded anywhere, from cars and TVs to mobile apps and smart home devices. Their flagship product, the Houndify platform, lets businesses create custom voice assistants, no big tech lock-in. Houndify is a full-stack solution, offering everything from speech recognition and natural language understanding to advanced contextual awareness. This empowers brands to build unique voice experiences tailored to their customers, while keeping full control over their data and branding. Major automakers like Hyundai and Mercedes-Benz use SoundHound to power advanced voice controls in their vehicles. These partnerships are a testament to SoundHound's reliability and technical prowess, as automakers demand solutions that are both robust and future-proof. In a world where drivers expect seamless, hands-free interaction, SoundHound delivers. Once integrated, these contracts last for years, making automotive a sticky, recurring revenue stream. The automotive industry is notoriously difficult to break into, but once a voice assistant is embedded in a vehicle, it tends to stay there for the entire model cycle, often 5 years or more. This creates a stable foundation for SoundHound's growth. But SoundHound isn't just in cars, they're powering drive-through AI for restaurants and voice controls for millions of Vizio smart TVs. In the quick-service restaurant industry, their voice AI is streamlining the ordering process, reducing wait times, and improving accuracy. In the living room, their tech is making it easier than ever to find your favorite show or control your smart home with just a few words. Every new integration feeds their AI more data, making it smarter and more accurate. The more devices and users interact with SoundHound's technology, the better it becomes at understanding accents, dialects, and even complex multi-step requests. This virtuous cycle of data and improvement is a key driver of their competitive edge. The total addressable market is massive. Any internet-connected device could use a voice assistant. From smart refrigerators and wearable tech to industrial equipment and healthcare devices, the potential applications are nearly limitless. As the world becomes more connected, the demand for intuitive, voice-driven interfaces will only accelerate. SoundHound's independence is a key advantage. Brands want control over their data and user experience. In an era where privacy and data security are top concerns, companies are increasingly wary of handing over sensitive information to tech giants. SoundHound's neutral position allows partners to maintain ownership of their data, customize the user journey, and differentiate themselves in a crowded market. Their tech is built for complex contextual queries, giving them an edge over consumer-focused assistants. SoundHound's proprietary speech-to-meaning and deep-meaning understanding technologies allow users to ask follow-up questions, clarify requests, and interact in a truly conversational way, something most mainstream assistants still struggle with. Financially, SoundHound is growing fast, with a strong backlog of multi-year contracts in automotive and IoT. Their revenue has been accelerating as more partners come on board, and their pipeline of future deals continues to expand. This backlog provides visibility and stability, which is rare for a company at this stage of growth. They're investing heavily in R&D to capture market share, and as they scale, margins should improve. The company is focused on building out its technology stack, hiring top talent, and expanding into new verticals. As fixed costs are spread over a larger revenue base, profitability should follow. NVIDIA's strategic investment is a huge vote of confidence and opens doors for deeper collaboration. With NVIDIA's expertise in AI hardware and cloud infrastructure, SoundHound can accelerate its innovation and reach. This partnership could lead to new products, faster processing, and even more powerful AI capabilities. Risks. Competition from tech giants is real, but SoundHound's neutrality and customization set them apart. While companies like Google, Amazon, and Apple have vast resources, they're often limited by their own ecosystems and privacy policies. SoundHound's open approach appeals to businesses that want flexibility and control. The core thesis, voice will be the next major interface, and SoundHound is building the foundation. As screens become less central and devices become more ambient, voice will be the most natural way to interact with technology. SoundHound is positioning itself to be the backbone of this transformation. The company is sitting at a market cap of about $4.89 billion, and it posted earnings per share of negative 0.90. For full year 2024, SoundHound reported revenue of about $84.69 million, while net income came in at negative $351 million. That is a clear reminder that the story here is still about scaling and monetization, not current profitability. For long-term investors, volatility is an opportunity. Focus on the business, not the daily price swings. The stock may be bumpy, but the underlying business fundamentals are what matter most. If you believe in the future of voice, patience could be rewarded. This is a bet on management's execution and the accelerating trend of conversational AI. The leadership team has a proven track record, and the market for voice technology is expanding rapidly as more investors recognize its value. If they deliver, the upside is enormous relative to their current size. With a small market cap compared to the giants, even modest success could translate into significant returns for early investors. SoundHound AI, an independent leader in a transformative industry. Their technology is already touching millions of lives, and their vision is only getting bigger. Keep it on your watch list and do your own research. As always, investing in emerging tech comes with risks, but the potential rewards can be game-changing. Now, let's move to our second company, quietly building the backbone of the digital world. Next up is Nebius, ticker symbol NBIS, a rising star in the world of cloud infrastructure. While it may not be a household name yet, Nebius is quickly making waves in the tech industry, carving out a unique space for itself among the giants. While AWS and Azure continue to dominate the headlines and capture the lion's share of the market, Nebius is quietly building a loyal following by focusing on what matters most to modern businesses: simplicity, high performance, and a developer-friendly experience. Instead of trying to outspend the giants, Nebius is outsmarting them by zeroing in on the needs of customers who feel underserved by the complexity and rigidity of the big players. Their open-source, transparent platform is a breath of fresh air for startups and small to medium businesses. These companies are often wary of vendor lock-in and unpredictable, complex pricing models. Nebius offers them a clear, flexible alternative, making it easier for new ventures to scale without fear of being trapped or hit with surprise costs. The open-source approach also means that developers can contribute, customize, and innovate on top of Nebius's platform, fostering a vibrant community. Nebius is also expanding rapidly in emerging markets, building local data centers in regions where the big cloud providers are less focused. This strategy not only brings faster, more reliable service to underserved areas, but also helps Nebius establish itself as a trusted partner in regions with huge growth potential. By being first to market in these locations, Nebius is setting the stage for long-term dominance. Another key differentiator is their customer-centric approach. Nebius offers 24/7 support to all clients regardless of size. This level of service is rare in the industry, especially for smaller customers, and it's building strong loyalty while reducing customer churn. Businesses know they can rely on Nebius for help at any hour, which is a huge advantage in today's always-on digital world. Sustainability is also at the core of Nebius's strategy. They're investing heavily in energy-efficient data centers, using cutting-edge cooling and power management technologies to reduce their environmental footprint. This not only appeals to environmentally conscious businesses, but also helps Nebius improve its margins by lowering operating costs. As more companies prioritize ESG goals, Nebius's green credentials are becoming a powerful selling point. Financially, Nebius is in a high-growth phase. The company is reinvesting aggressively in infrastructure, technology, and global expansion. This forward-thinking approach is fueling rapid revenue growth and positioning Nebius to capture a significant share of the expanding cloud market. Their ability to scale quickly while maintaining quality is a testament to their operational excellence. Their net revenue retention is particularly impressive, indicating that existing customers are not only sticking around, but also increasing their spending over time. This is a strong signal of customer satisfaction and the growing value Nebius provides as clients expand their use of its services. The management team at Nebius brings deep experience from both the cloud and telecom sectors. This blend of expertise gives them a clear playbook for scaling the business, navigating regulatory challenges, and forging strategic partnerships. Their leadership is a major asset as Nebius enters new markets and faces off against larger competitors. The global cloud market is massive and still growing at a rapid pace. Nebius doesn't need to dethrone AWS or Azure to succeed, it simply needs to capture a growing slice of this enormous pie. Even a small percentage of market share can translate into billions in revenue as more businesses migrate to the cloud. By focusing on SMBs and developers, Nebius is carving out a defensible niche that insulates it from direct competition with the hyperscalers. These customers value flexibility, transparency, and community support, areas where Nebius excels. As Nebius continues to roll out more managed services and value-added features, its margins and customer stickiness are expected to increase. The more integrated Nebius becomes in its customers' operations, the harder it will be for them to switch providers. The long-term trend is unmistakable: more data, more applications, and more businesses moving to the cloud every year. Nebius is perfectly positioned to ride this wave, providing the essential infrastructure that powers the digital economy. In many ways, Nebius is a classic picks and shovels play on the digital gold rush. As more companies build, launch, and scale digital products, they all need reliable, scalable cloud infrastructure, and Nebius is there to provide it. Of course, there are risks. Competition is fierce, and the tech sector is known for its volatility. But the sheer size of the market means there's room for multiple winners, and Nebius's differentiated approach gives it a real shot at long-term success. As Nebius scales, it could also become an attractive acquisition target for larger tech companies looking to expand their cloud offerings or enter new markets. This potential adds another layer of upside for investors. Keep an eye out for Nebius's financial inflection point, when revenue growth begins to outpace spending and the company turns the corner to profitability. This is often when the market really starts to take notice. Nebius has a market cap of roughly $22.08 billion, with earnings per share of negative 0.19. In 2024, it reported revenue of about $25.78 billion, but still delivered net income of negative $641.4 million. So even with a much larger revenue base, profitability remains a challenge, which tells you margins and cost structure matter just as much as top-line growth. In summary, Nebius is an overlooked player with genuine multi-bagger potential. Its focus on transparency, customer service, and sustainable growth sets it apart in a crowded field. As always, do your due diligence and keep a close watch on Nebius's growth, metrics, customer retention, and expansion into new markets. The next few years could be transformative for this ambitious company. Now, let's turn our attention to our third company, one that's powering the next wave of the AI revolution. Our final pick is CoreWeave, ticker CRWV, a specialist in high-performance computing for AI. While many companies are racing to build the next big AI model, CoreWeave is quietly building the backbone that makes those breakthroughs possible. They're not just another name in the cloud computing space. They're laser-focused on providing the raw power that today's most demanding AI workloads require. CoreWeave isn't a general cloud provider. They focus exclusively on delivering the most powerful GPUs, especially from NVIDIA. Their infrastructure is purpose-built for AI, machine learning, and other compute-intensive applications, making them the go-to choice for organizations that need serious horsepower. Unlike traditional cloud giants, CoreWeave's entire business is optimized for speed, scale, and flexibility, giving their clients a significant edge. Their roots in crypto mining gave them unmatched expertise in managing massive GPU fleets. Years before the AI boom, CoreWeave was already operating at a scale that most companies could only dream of, learning how to maximize performance, efficiency, and uptime. This experience gave them a unique head start when the world's appetite for AI compute exploded. When crypto cooled, they pivoted to serve the exploding demand for AI and machine learning compute. Instead of winding down, CoreWeave retooled its entire operation, transforming mining rigs into AI supercomputers. This strategic shift allowed them to ride the next wave of technological innovation, positioning themselves at the heart of the AI revolution. Their proprietary software and networking deliver bare metal performance with cloud flexibility, ideal for AI researchers and enterprises. CoreWeave's platform lets customers access the latest GPUs on demand, scale up or down instantly, and run complex workloads without the overhead of traditional cloud environments. This combination of raw power and ease of use is a game changer for anyone building or training large AI models. CoreWeave's customers include AI startups, research labs, and large enterprises training massive models. From cutting-edge generative AI companies to established Fortune 500s, their client list reads like a who's who of the AI world. These organizations rely on CoreWeave to deliver the compute resources they need to stay ahead of the competition and push the boundaries of what's possible. Their top-tier partnership with NVIDIA gives them priority access to the latest chips, a huge advantage as demand outstrips supply. In a world where the newest GPUs are often back-ordered for months, CoreWeave's close relationship with NVIDIA ensures their customers get first dibs on the most advanced hardware. This not only boosts performance but also cements CoreWeave's reputation as a leader in the AI infrastructure space. Microsoft's investment and partnership is a game-changer, validating CoreWeave's tech and fueling rapid expansion. With backing from one of the world's largest tech companies, CoreWeave has the resources and credibility to scale even faster. This partnership also opens doors to new customers and markets, further accelerating their growth trajectory. Financially, CoreWeave is growing at a staggering pace, reportedly generating billions in revenue and already profitable. Their revenue growth is outpacing many of their peers, and their ability to turn a profit so early in their life cycle is a testament to the strength of their business model. Investors are taking notice, and the company's financials are setting the stage for a blockbuster IPO. Their business is sticky. Once a company builds on CoreWeave, switching is costly and difficult. The deep integration of CoreWeave's infrastructure into their clients' workflows creates high switching costs, leading to long-term, recurring revenue streams. This stickiness is a key reason why CoreWeave's customer retention rates are among the highest in the industry. Risks include dependence on NVIDIA and the pace of AI investment, but CoreWeave's operational expertise positions them to adapt. While relying on a single hardware supplier can be risky, CoreWeave's deep technical know-how and agile business model give them the flexibility to pivot if needed. They're also keeping a close eye on emerging chip makers and alternative technologies to stay ahead of the curve. They're expanding into AI inference, a massive long-term market, and diversifying their customer base across industries. By moving beyond just training AI models to powering real-time inference and deployment, CoreWeave is tapping into a whole new wave of demand. Their expansion into sectors like healthcare, finance, and entertainment ensures they're not just riding a single trend, but building a resilient, future-proof business. When CoreWeave goes public, expect a high-profile IPO, focus on the long-term trajectory, not just the initial hype. The company's fundamentals, growth prospects, and strategic partnerships make it one of the most anticipated tech IPOs in recent memory. For investors, the real opportunity lies in CoreWeave's potential to shape the future of AI infrastructure for years to come. CoreWeave is valued at around $39.16 billion in market cap. It posted earnings per share of negative 1.66. In 2024, CoreWeave generated about $1.91 billion in revenue, but net income was negative $937.76 million. In other words, the company is producing real scale on revenue, yet the losses show how capital-intensive this phase of the AI infrastructure build-out can be. This is the purest play on the AI infrastructure build-out, a picks and shovels provider for the AI gold rush. Just as the suppliers of tools and equipment profited during past technology booms, CoreWeave stands to benefit as the essential enabler of the AI era. Their focus on infrastructure means they'll profit no matter which AI applications or companies come out on top. As AI continues to transform industries and reshape the global economy, CoreWeave's role as the engine behind this transformation will only grow more critical. Their relentless innovation and strategic vision make them a company to watch. Keep it at the top of your IPO watch list. If you're looking for exposure to the infrastructure driving the AI revolution, CoreWeave is a name you won't want to miss. There you have it. 3 breakout stocks shaping the future: SoundHound AI, Nebius, and CoreWeave. Each targets a massive market with a unique edge and long-term growth potential. High growth means higher risk. Do your own research and know your risk tolerance. Which trend excites you most? Conversational AI, democratized cloud, or specialized AI compute? Let me know in the comments. For exclusive analysis and real-time alerts, join the StocksGalore Patreon, link in the description. Like, comment, and subscribe for more investing insights. Thanks for watching. See you in the next one.